Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Wednesday, 14th of August, CPI day. Before the CPI, we got the NBA 30-year mortgage still continuing lower, this time 6.54. And look at the refinance index, 889 refinance. And this is a trend that as long as we continue trending lower in interest rates, the mortgage rates are going to lower, and these refinance people are going to negotiate better mortgage rates. And that's good for households because it brings down the pain that the higher interest rates are causing. But the big deal for today was the CPI. And in terms of core inflation, we got month over month, same as expected, a little bit of an uptick from the 0.1%, and year over year, we are at 3.2, as expected. Still a little bit of decrease from the 3.3%. So this is more or less in line as expectations. This is not as yesterday's PPI that was quite a good surprise. And in terms of headline general inflation, month over month, 0.2 coming from the negative big surprise on June. For now, we got 0.2 as expected, and year over year, we are at 2.9. We are going below 3%, I think, for the first time in a long time. Let me just put 5 years here. This is the first time that we were below 3% since March 2021. This is good news in terms of trend, but I don't think this, if you go to the detail, this is the report that the BLS gives out, and you can see that the services are still 0.3% and 4.9% unadjusted. Shelter continues to be an outlier, 0.4 in the increase. Transportation services 0.4, and this is the mother of all issues, the sticky part of inflation, the services. On the other hand, we have food 0.2, food at home and food away at home that are also increasing, all three. And the only thing that is basically pushing lower is commodities, for example, new vehicles, used car and trucks are year over year 10.9%. Huge. So this is a decent CPI, I would say. It was as expected, but it's not good. So that's why we are seeing this chop in the market. But at the end of the day, the patience, the discipline, and the risk management give you money. And following your process to wait for the proper setup, it's always going to have the best outcome. This is the 15-minute chart. And as you can see, we had an overnight quite silent, quite quiet, until we got the CPI candle. On the CPI, in big moves like this, look at where we basically drop this liquidity, and this liquidity. So basically, the CPI candle was both pre-market high and both liquidity to the downside, a reset. It took everyone's out. These algos are quite manipulative. So basically, on the CPI candle, everyone got stopped out. And we were trying, the first thing that I like to do is on the 1 minute and on the 5 minute, frame the week. This week to the downside, the 50% is this line, and on the 1 minute, the week is more extended. So this is the other one. So in this range, I would like to see support. I would like to see buyers. I would like to see some kind of bounce. And that aligns with a 15-minute fair value gap that we got from yesterday. So on the mid, I had this zone as very critical. On the first move, we bounced off that, and I took this fair value gap scalp for 19 points of risk towards the upper wick, the upper part of the candle at 19,100. And I was quite concerned here my stop was after this, my stop was at break even. I didn't want this trade to go the other way. So I protected into the open. Into the open, we went up, we rejected, and we started the trend lower. So I got lucky, honestly. 52 points to start the day was pretty good. It was either that or stop at break even, so 1,000 bucks with one contract. And then everyone started to sell, sell, sell. I mean, look at this trend. It's quite obvious that they wanted to go lower. Until when and until where? Where can we have support? The first sign of support was supposed to be at the low of the CPI candle, aligned with this inverse fair value gap that we got here. So as you can see, we got rejected here, here, and then we moved lower. On this manipulation move, I was pretty sure that we were going to bounce off that. What is this? This is, let me just show you. This is a 5-minute fair value gap from yesterday. One of the few fair value gaps that was left behind with a nice pivot in here. I was just watching if we were going to respect this zone, and we bounce off that. Now, where do we enter? You know my setup. I want my perfect setup, A+ setup is an inverse with a bullish fair value gap and then a tap into that for a long. That's what I did. These two candles were not touching the inverse, so that's why I took this one, even though it was worse risk, 34 points, and my target was pretty conservative. I didn't know if we were going to hunt the high of day, so I just wanted the next fair value gap. The next fair value gap was this one with this week up here rejected. So I was just the previous candle, this one, the entry on the inverse fair value gap was just my target. It was there. So it was a 1 to 2.64 residual ratio for 91 points. And let me tell you, it opened up, it was perfect. Big push, consolidation, big push, consolidation, big push, consolidation, big push, consolidation. I mean, the same way that we dropped with as a textbook per trend, we change trend with a snap. We broke the 45 EMA, and since then we were pushing higher until the high of day. Now that we hunted high of day and we rejected here and we are now below point of control, now my trade is no longer valid. I took 91 plus 50, 140 points, almost 3,000 bucks on a CPI day with risk management, with patience, waiting for my setup, seeing my levels. Those were respected, then were not. Then I searched, I looked for other levels. I mean, this is what trading is all about. And I'm trying to share this with you because I've been profitable for a long time and I've been fighting and trading these markets and I found a strategy, but the most important part is the mental side. Don't lose to FOMO. Be disciplined, be patient, work on those skills, because then if you try to buy high of day, look at this. You have to find your setup, your strategy, and work on the mental aspect of the trading. Things that I see that I don't like. Dollar, it's coming back up. We have the small caps suffering with a decent CPI, but it's not what everyone was expecting. So basically Russell is suffering, banks are mixed, and the overall breadth, it's still pushing, but after the big risk off that we got in here, I would have to see basically this move and the RSP at these levels above 170 to really see momentum picking up again. This CPI data was not super good, was not bad either, but I really want to see better price action. And I mean, this price action was good, but if you zoom out and if you see where we are, we are where everyone's volume is at the point of control. Well, we actually flip the point of control down here. Let me just clean this a little bit for you and to try to make some forecasts and try to, I mean, I'm gonna leave these two. This one is for sure there. Move that. So we got this. Bear with me a moment. So these pivots are out. This gone. I think that's all. So where we are right now, we are at the range, at this range, this purple range with the point of control here. And if you see this line is the point of control of what? Of basically, let me just watch it again. It is here. So we have the range point of control from the lows. So we have two from the all-time highs. It's up here still. And from the range is down here. It's actually right here. So if we take that out, let's extend the point of control from all-time highs, which is this one up here. And the volume from the lows, it's basically exactly that one. So the volume from all-time highs is it's getting resistance here. And the volume from the lows, from where are you? I can see you from here. It's from this range. So let me just adjust that to the lows to do it as we should do it, to contrast, to really compare what is the volume from the all-time highs versus what is the volume versus the lows. So as you can see, versus the lows, we are down here. We are down here in this volume. So I'm going to move that down because I want to track who is buying the bottom. So this is point of controls from lows, from the bottom. And I want to see, obviously, that people, those are in the money. But the people from all-time highs are really still pushing because they don't see a good CPI. For whatever reason, they are adjusting and rejecting. And this rejection is pretty bad. So let's remove also this because we already took that. This is gone. And this is just a clean chart for today because we are going to focus on the higher time frames, on the 1 hour. So as you can see, we have big volume up here. This is the point of control from all the range since all-time highs. And we've been getting and rejecting all these. And we have here a low volume node. So basically, we are fighting up here, and I would expect a pullback to this low volume zone to really find more participants and take again a retest of this point of control from the all-time highs. I still have here a couple of setups, a couple of levels from yesterday, because yesterday was a day in which we added 24,000 of open interest in the ES and 6,000 on the NQ. So yesterday was quite a big day in terms of new buyers. So I want to see in this range a pullback or a rejection and a fail, basically. So for now, we have this 5 minute being respected, but this kind of chop, this is a whipsaw. So we have still the point of control from all-time highs there, and the the support that I would like to see is it's this zone. Is this zone. I want to see 18,800s again, because yesterday it was so huge. Look at these 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 straight 30-minute candles in a row. So you don't want this kind of price action because it's not efficient. We need to test those imbalances, and I have a couple of zones in which I would like to see the market. But right now, today turned to be from a nice V-shaped reversal to now a whipsaw. What is happening? I don't have any news, but what I'm seeing is just rejection from the highs at this range. I was expecting to see today's level on the point of control being tested. So this point of control being tested. I would like to see the close today to see if we are going to be so strong that we are pushing the point of control there, but we still have this in here, which is pretty bad range. But right now I expect chop and more chop and more chop unless we really bring a lot of buyers. That's what we did yesterday in this move, but perhaps we need more of a retest to bring up more people, even more swing traders, even more investors to really tackle all this volume up here. So more patience for the week. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel. I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. The trading day is not over yet. It was quite a volatile day, and we are seeing rejection at the highs. I would wait for the close today, reassess the situation, and the optimum pullback would be at this zone between 18,840s and 860s. That would be the golden pocket pullback from yesterday's big grind day. And I mean, it would be a good zone for a retest and maybe have a big day to the upside. Today I've seen hesitation. And when I see hesitation, I don't see confidence. I mean, we all see the same. So this kind of price action is not of a CPI which changed everything. So really be disciplined, be patient, wait for better opportunities tomorrow or after tomorrow. There are plenty of days. Live to trade another day. Stay safe, everyone, and see you tomorrow.